Electronic communication networks, or ECNs, are designed to provide a direct link between buyers and sellers in the securities market, enabling electronic trading. These networks are broker neutral, meaning they aren't tied to a specific brokerage firm and offer a platform for various market participants to interact directly. The core function of an ECN is to match buy and sell orders electronically, often providing faster execution speeds and potentially better prices compared to traditional trading methods. One key benefit of using an ECN is increased transparency. Because orders are displayed on the network, participants can see the available bids and offers, allowing for more informed trading decisions. This transparency can lead to more competitive pricing as market participants can react quickly to changes in supply and demand. Functionally, an ECN operates by aggregating orders from various sources and matching them based on price and size. When a match is found, the trade is executed automatically. The ECN then reports the trade to the relevant regulatory bodies and clearinghouses. ECN typically generate revenue through transaction fees, charging a small fee for each trade executed on their platform. This fee structure incentivizes the ECN to facilitate as many trades as possible, contributing to market liquidity. It's important to note that ECN are subject to regulatory oversight, ensuring fair and transparent trading practices. Regulations vary by jurisdiction but generally aim to protect investors and maintain market integrity. Accessing an ECN usually requires an account with a brokerage firm that supports ECN trading. The brokerage firm provides the necessary infrastructure and connectivity for clients to access the ECN platform. Common issues that might arise include temporary disruptions or outages. Like any electronic system, ECN can experience technical difficulties that may affect their availability. These disruptions can be caused by various factors, such as software glitches, hardware failures, or network congestion. Furthermore, scheduled maintenance can also temporarily interrupt ECN services. ECN providers typically announce planned maintenance in advance to minimize inconvenience to users. If you encounter difficulties accessing an ECN, there are several steps you can take. Firstly, check with your brokerage firm to see if there are any known issues affecting their connection to the ECN. The brokerage firm may have information on planned maintenance or technical problems that are impacting access. Secondly, contact the ECN provider directly. The ECN provider can provide updates on any service disruptions or technical issues that may be affecting the service. Their support team can help diagnose the problem and provide solutions. Thirdly, verify your internet connection and trading platform. Ensure that your internet connection is stable and that your trading platform is functioning correctly. Sometimes, connectivity issues or software glitches on your end can prevent you from accessing the ECN. It is also helpful to monitor market news and announcements from the ECN provider. These sources often provide information on any planned maintenance or significant events that may impact ECN services. By staying informed, you can anticipate potential disruptions and adjust your trading strategy accordingly. Now, let's elaborate on some of the key aspects of ECN. Consider order types. ECN support various order types, including market orders, limit orders, and stop orders. Market orders are executed immediately at the best available price. Limit orders specify the maximum price you are willing to pay for a buy order or the minimum price you are willing to accept for a sell order. Stop orders become market orders when the specified stop price is reached. The availability of different order types allows traders to implement various trading strategies and manage risk effectively. Depth of market is also an important concept. ECN provide depth of market information, which displays the available bid and ask prices along with the corresponding order sizes. This information gives traders a comprehensive view of the supply and demand for a particular security. Analyzing depth of market data can help traders identify potential support and resistance levels, as well as gauge the overall market sentiment. Another consideration is routing. ECN often offers smart order routing capabilities, which automatically route orders to the best available market center based on price and execution speed. This feature helps traders obtain the most favorable execution prices and minimizes the risk of missed opportunities. Smart order routing algorithms take into account factors such as price, size, and liquidity when determining the optimal routing destination. Let's explore some of the advantages and disadvantages of using ECN. Advantages include faster execution speeds. ECN typically offer faster execution speeds compared to traditional trading methods, as orders are matched electronically without the need for intermediaries. This can be particularly beneficial for day traders and other short-term traders who rely on quick execution to capitalize on fleeting market opportunities. The potential for better prices is another advantage. Due to increased transparency and competition, ECN can often provide better prices than traditional exchanges. Traders can benefit from tighter spreads and more favorable execution prices, potentially increasing their profitability. Direct market access is also a key benefit. ECN provide direct market access, allowing traders to interact directly with other market participants without the need for middlemen. This can result in greater control over order execution and reduce transaction costs. However, there are also some disadvantages to consider. Complexity is one factor. ECN can be complex to use, especially for novice traders. Understanding the various order types, routing options, and market data feeds can require some learning and experience. There are also access requirements to consider. Accessing an ECN typically requires an account with a brokerage firm that supports ECN trading. Not all brokerage firms offer ECN access, so traders may need to switch brokers to gain access to the network. Furthermore, fees are a concern. ECN typically charge transaction fees for each trade executed on their platform. These fees can add up, especially for high-frequency traders. Traders should carefully consider the fee structure of the ECN and factor it into their trading costs. The impact of technology is also relevant. ECN rely on technology infrastructure, and technical glitches or outages can disrupt trading activity. Traders should be prepared for potential technical issues and have contingency plans in place. Moving on to the legal and regulatory landscape, ECN are subject to regulations by bodies such as the Securities and Exchange Commission. These regulations are designed to ensure fair and transparent trading practices and protect investors from fraud and manipulation. ECN must comply with various rules and regulations, including those related to order handling, market data dissemination, and anti-money laundering. Compliance with these regulations is essential for maintaining the integrity of the market and protecting investors. From a historical perspective, ECN emerged in the late 1990s as a response to the growing demand for electronic trading. Before ECN, most trading was conducted through traditional exchanges, which often involved manual order processing and limited transparency. ECN revolutionized the trading landscape by providing a platform for direct electronic trading, resulting in faster execution speeds, lower transaction costs, and increased transparency. The rise of ECN has also led to increased competition among market centers, benefiting traders through better prices and more efficient order execution. As technology continues to evolve, ECN are likely to play an increasingly important role in the financial markets. Future developments may include the integration of artificial intelligence and machine learning to improve order routing and execution, as well as the use of blockchain technology to enhance security and transparency. Staying informed about these technological advancements can help traders stay ahead of the curve and capitalize on new opportunities. A few tips can help you optimize your ECN trading experience. Firstly, understand the order types. Familiarize yourself with the different order types available on the ECN and choose the ones that best suit your trading strategy. Limit orders can help you control the price at which you buy or sell a security, while market orders can ensure quick execution. Secondly, monitor market data. Pay close attention to market data feeds, including bid and ask prices, order sizes, and depth of market information. This information can help you make informed trading decisions and identify potential trading opportunities. Thirdly, manage your risk. Use stop-loss orders to limit your potential losses and protect your capital. Set realistic profit targets and avoid excessive leverage. Fourthly, stay informed. Keep up to date with market news, economic events, and regulatory developments that may impact the financial markets. This information can help you anticipate potential market movements and adjust your trading strategy accordingly. Fifthly, review your performance. Regularly review your trading performance and identify areas for improvement. Analyze your winning and losing trades to understand what worked and what didn't. Over time, this analysis can help you refine your trading strategy and improve your profitability. Finally, consider the specific characteristics of individual ECN. Different ECN may have varying fee structures, order routing capabilities, and market data offerings. Research and compare different ECN to find the one that best meets your needs and preferences. Ultimately, electronic communication networks offer a valuable tool for traders seeking direct market access, faster execution speeds, and increased transparency. Understanding how ECN work, staying informed about market developments, and carefully managing your risk can help you succeed in the dynamic world of electronic trading. While temporary disruptions can occur, these networks remain essential components of modern financial markets.